increase, volatility to continue to increase, and all of that. And so definitely for sure, we want to stay as closely up to date as we possibly can on it all, just because it does give you a big reason for why conditions are the way that they are. So the interesting thing that took place this past week was the two halts in the market, which if you legends are not aware of, I'll pull it up for you guys real quick. There are three main ways that markets can be halted. And I'm just going to pull this up for you guys real quick so you guys are aware. You have a level 1 breach, which is a 7% decline in the S&P, in which trading would be halted for 15 minutes. You have a level 2 breach, in which S&P drops 13% in total, in which trading would be once again halted for 15 minutes. And then you have a level 3 breach, in which that takes a 20% drop to take place. And once it does, you would see markets close for the remainder of the day. It was kind of annoying during the New York session this past week, but also just gave some insight with regards to conditions and what we could expect, which is if you do have a feeling that S&P is going to continue to drop, continue to make such erratic movements, you might want to be as careful as you possibly can in New York. There's nothing obviously that you can do per se by trying to avoid it, but what I'm trying to say is if you don't want to be involved in positions, that's fine. If you want to try to mitigate the risk associated to you, that's fine as well. Definitely the way that we're looking at things, we definitely could expect another halt within the market, no question about that. And so just want to kind of go into the basis of why we did see the breaches and the halts that we did. I think it's very important, once again, just to take into consideration that they do this for precautionary measures. Ultimately, what it does is try to stop all the massive selling. But in the end of the day, you can't necessarily stop the inevitable. There's just so much market pressure associated to this as of right now. And so if things continue to look in the way that they are, as we just closed about a pretty significant region on the weekly, we could definitely expect a further rally down. The question becomes, and this is what we really want to look at, especially when looking at the S&P, is are we just going to make a straight shot down, or are we going to start to pull back a little bit? Obviously, we've corrected out of this, and we can see that the move that's taking place right now is quite impulsive, right? We know that that movement itself is just an impulse, which is a consistency of 2 points. So for it to actually develop a trend, at some point it will have to pull back if we're going to expect another leg down, right? A bigger question becomes, when do we pull back? Since we did just break, a pretty significant region within there, apologies for the really bad drawing, right? The question is, do we now start to pull back, grab orders, and then we can expect another leg? Or is the basis going to be on, we will continue to hold this momentum, we will continue to drop down into these 2019 November lows, and then from there we could expect a pullback and another drop down. Regardless, the bigger thing that we want to take into consideration is that this here and this correcting out is very important, and how aggressive this is very important. We take a look at other weeks, we take a look at other conditions. The only other time that we've really received such aggressiveness was back in 07, and if this loaded back in 01 as well. But what I want you to be mindful of is that these movements are not as aggressive as the current that are taking place. And so it really just comes down to, at the end of the day, how much of the market from a psychological standpoint can we really wipe out. And that's just very, very, very important to take into consideration. Overall, though, we are below a pretty significant point on the monthly sitting here around the 2,800 level. So because of that, we could expect orders now starting to come into that 2,800 300 up until about, I think, that 20 at 2500. So kind of within here, which we're already trying to push into. Like I said, we could expect some type of pullback before another drop, but the question is, do we drop then pull back, or do we pull back then drop? Regardless, should be expecting another drop, which means you should be expecting for markets to be halted once more. Remember, at the end of the day, when they're just halting, they're just trying to stop the sell-off, but you know, it's nothing that they can do. There's nothing that they can do. And like I said, just going back to this map, I don't remember what it was last week. I'm gonna look at the recording real quick here and see where we were, just see the progression that took place last week with it all. Did I pull up the map yet? So how much was it in total? Yeah. So like I said, like we, from last week into this week, we basically doubled. And I want you guys to just look at some important numbers here, which is just quite astonishing to me. These numbers aren't actually real. You can see that China has relatively stayed the same, and people are saying like, oh, you know, China is now leveling out and blah, 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 but I don't believe that. I don't believe that's the case in a country that has over 1 billion people. I would look at the other countries, and that's really the numbers that you want to focus on. And what you can see here is that US obviously has quintupled, if not more. Italy, same concept. Italy was at 5,000, and we are currently over 21,000. So definitely, for sure, don't focus on this, and don't focus on Russia over there either, but you just want to focus on the basis that numbers are continuing to increase at a very rapid rate. And because of that, you can expect further volatility in the market.